IBM is getting a lot of attention today. Its CEO Ginni Rometty telling the New York Times Big Blue is facing a rocky time, but that the tech giant is poised for growth. How much growth might be in IBM's future? Let's get some answers from Lou Masoscia. He's Managing Director of Enterprise Hardware with CLSA Americas. Lou, welcome. Good to have you with us.
Okay, thank you.
Do you have a rating on this stock? Do you like it at these prices? It's been basically flat to a little bit down over the past 12 months.
It has. We do actually have a buy rating in the shares and a $225 price target. We're really looking out to the end of the year when we think a lot of the investments the company's making are going to start to kick in, and we would expect their business to start to turn by then.
Lou, what's wrong with Big Blue? Is it one major aspect of the company that is not firing on all, you know what I mean?
Cylinders, sure.
Thank you. Or is it many things at IBM that aren't working?
Well, it is a number of things, and it's a number of things that have actually hit sort of all at once. In the hardware sector, which is about 15% of revenue, they're not in the good cycle of their main freight cycle, which is an 8-quarter cycle. But that should come back either at the end of this year or early next. Their power business has also been weak. So that's the area that's really dragged them down. From a geographic standpoint, the emerging markets, which had actually been stellar growth for areas for the company, also hurt them. But Europe is starting to come back a bit, and we expect by the end of the year, U.S. to start to return. So it's both a geographic thing and also a product thing. But we believe they're making a lot of investments to offset these issues.
Do you like what Ms. Rometty is doing, and is she doing it fast enough?
Well, I think there is a little bit of a perception that she's not doing it fast enough, but actually she's made quite a bit of investments. Besides all the acquisitions IBM historically makes, they did SoftLayer last year. That was $2 billion. Then they decided to invest an additional $1 billion on top of that to double SoftLayer's footprint, which competes with Amazon's AWS and Google and Microsoft in web hosting. They're also investing in some of the hardware business in flash computing, in the power systems, and Watson. So we think that she is stepping up. And as you know, Wednesday is an analyst meeting. We expect her to try to highlight some of these opportunities that she sees in front of the company.
But is acquisition and investment the way to go, or do they have to fundamentally basically shake the tree and change the way a lot of the different units in IBM function? Or maybe it's both?
Well, it's probably a little bit of both. The software and services area, 80% of revenue, most of the profit has actually been doing okay. Software doing better than services. Services growing slow, but actually with very good margins. So don't really look for huge changes in those areas. But they're not standing still there either. They're actually taking all their middleware, a good portion of it, investing $1 billion there and turning it into applications for the web. So we don't believe that they're sitting still. We think that they're looking towards the future and actually starting to react and invest in it.
This is a multifaceted company. Obviously, that's an understatement. But Lou, who do you consider their principal competitors to be, and how do you rank them as a performer and as a stock against those competitors?
Well, I think when you look at their traditional competitors, the other big tech companies, whether it's Cisco or EMC, which they compete with many of those in slices, or Oracle, many of them are actually having difficulties growing now. And obviously, I'm sure you've talked on this show many, many times about the cloud. So I think that the real competition is the secular changes in the IT industry, which are some of the things IBM is trying to now change and reform themselves with the investments that they're making. So I wouldn't say that there's any one large IT company that's really hurting them. I think it's more the secular changes in the IT industry.
Lou, thank you very much. Maybe we'll have you back after that analyst day on Wednesday. Lou Masoscia with
thank you.
CLSA America.